Hey, Mark the Meerkat in for D7 here at the weekend review. I'm going to take three parts here. I'm going to do the fast and the curious part, just a real quick blow through over the week from a technical analysis standpoint. Number two, I'm going to give you the two secrets to making money consistently in the market. And then part three will be, we'll go back and do the detail of looking at the charts from a technical standpoint. We'll look at not only the daily charts, we'll look at the weekly charts. And because we just finished the month of August, we'll look at the monthly charts and see what the charts are telling us about where the market is today. So you ready? Here we go. Fast and the Furious. Here we are on the S&P 500. Here we are on a bull flag. And look at this. It's called capitulation here. When I go through the details of the market, I'll talk about what capitulation is and how it shows up on a chart and what it tells us. And then here it broke out from the bull flag here back on the 23rd. And it was kind of a fake breakout and then took off again here. We're working our way up there. Then we got the Dow Jones Industrial Average here. It's doing a bull pullback here. It just stalled here the last couple of days right here, just under 35,000. So here we go. And then we got the NASDAQ here. It pulled back here. There's that capitulation thing going on, and it's taking off here now. So it was a bull pullback and then taking off here above 1,400. Then we have the Russell, the small cap Russell here, came down here, was low basing right at the 200 moving average here. And then finally it took off here and is now back above 1900, which was major resistance over here. And it's starting to break out from there. And then there was Bank here. It's been lagging. It just hasn't been going up as much as the rest of the markets here, but starting to do a bull pullback there as well. Now here's the interesting one on the VIX here. We closed at 13.09. That's the lowest close on the VIX since 2020. We haven't been in this range since 2020, folks. So very, very complacent. Yes, we were back here just above that 1300 area, or that 13 area here prior to this, but that's very key factor. The markets are very, very confident. They're not buying up there, buying push to protect their long positions. So the fear level is very down, almost complacent here. So we can see what September is going to bring for us now. Okay, that's the fast and the furious. Now let's go and talk about what are the two things that are keys to making money consistently in the market. Number one is have a plan. We call it a trading plan in our mentoring class, and that is the first part of a plan is that you have rules. When X happens, I do Y. When Y happens, I do X. Non-emotional, thought out when the market's closed. And those are the rules that you're going to follow. And the B part of having a trading plan is to have a risk management system built within that. So what do I mean by that? That is that you can keep trading, and even if you're not successful in the short term, you will have enough money to trade with in the long term. That's what a risk management system is. Now then, what's the second key? The second key then to making money consistently in the market is you have to have the discipline to follow the trading plan that you develop. That's right. And so, think about discipline in this way. Not something you do to yourself, but something you're going to do for yourself. So those are the two key things. Where can you get that? Go to groktrade.com, groktrade.com. We have a mentoring program, and it helps you define exactly what needs to be in your trading plan. And we can't give you the discipline to follow it, but when you have a plan and you begin to build that and confirm it as you go along, you're going to build confidence in it to where you can rely on your trading plan to tell you when to trade and when not to trade. And where do you get that basis from? The charts, and that's what we're going to cover next year. All right, so that's a quick advertisement and everything else. Go to groktrade.com and you look under mentoring and you can go from there. Now let's go to, we'll slow down a little bit and go back, and we're going to look at the daily charts, the weekly charts, and we're going to look at the monthly charts. All right, so first of all here on the S&P 500, we're going back to there. We're in a bull flag, and you see here we have this wick down here. We had this candle went down and then came all the way back up on big. Whoops, that's in the way there, on big volume. That is a possible reversal pattern, not necessarily a trading pattern. And what happened? It went up from there, had this hiccup of a day, and then it's continued on up from there. And it's broken out from this bull flag. So that's called capitulation, where you have a big wick down and then it comes all the way back up. And then you've got high volume when that happens. What is happening here is the bull said, we're not going any lower, and they start to rush in with volume. And it can also happen on the top of it as well. You can have a capitulation to the top where it gets what they call exhausted, and then the bears say, okay, that's not going anymore, and they start buying, doing the short on it, and the volume is high as well. All right, let's take a look at the Dow Jones Industrial Average here on the daily chart. Again, this is a bull pullback right here. In fact, it was let's draw this in here. Look at that. It was a symmetrical triangle here, just waiting to do something here. And then who took over right here? Who took over right here? On this day, which was the 15th, bam, they went down here. And on this day, they changed their mind. We had a wick down, and no, the bulls pulled it all the way back up, and it's continued up since then. Right now, it's high basing here on the daily charts in that area there. So then we got the NASDAQ. And the NASDAQ, too, is had a capitulation here. Now, this is the index, so it doesn't have the volume on it. But there was also a high volume day. If you go to the QQQ ETF, you'll see that as well. That was a reversal day for that. Again, we had this hiccup day, and then it took off here, and we're now up here above 14,000. Right at 14,000 is where it closed here on Friday. Then the small cap Russells here. Yeah, it was down here, and it was just sitting down here on that 200 moving average for the longest time, and then it finally took off here. Again, on this day, it wicked way down, came all the way back up, and then look at that, running up, running up, running up. Now, we had a hint that it was going to be a pullback here. What was that on back here, down here on the MACD? You see how it had, we had higher swing highs, but we're getting lower swing highs here, and it fell down. And it was on the other markets as well. You can go back and take a look at those. All right, now let's take a look at bank on the daily. Again, it has not been as active as the rest of them. It's been low basing down here for a long time. Why? Well, the bank is, interest rates have been going up and up and up and up here. So finally getting maybe a little relief, bouncing off this 3,100 area and this 100 moving average. It's starting to roll up here. We'll see where it goes from here. Now, here was the VIX. I talked about this in the Fast and the Curious there. We are at the lowest level we have been since 2020. Now, this means the market is very compliant. Again, this is, if you're not familiar with the volatility index, it is an inverse indicator in that the lower it is, the more bullish it is, the higher it is, the more bearish it is. And it just measures the amount of fear, and that is that people are buying up puts, which are options which you make money when it goes down, and to counter the positions that they're holding long, that they're owning. So a lot of institutions, they're not allowed to short the market. They have to only be long the market, so they can buy puts to help protect those if they believe the market's going down in the future. We are very, very compliant right now. We were down here in July, and then we started, in August, as the market started to fall, it went back up here to 18 area, but to stay below 20, and then down here. I mean, we had, look at back, if we go back here, look at this. We go back here in 2023, look, we were above 20. Look at that day, for a long, long period of time. And we were above 18 for a long, long period of time. We go back here to 2022. Look at that. It was way up here in the 30s. And, very volatile and very bearish as well. So that is the VIX here. So we're going to do... Oops, yeah, bring it back up here. There we go. All right, let's go. Those are on the daily charts. Now let's go to the weekly charts and see what they're telling us about where the market is. So let's go over here to the weekly charts, and now we do the S&P 500 weekly charts here. Each one of these is a week, and you can see here a beautiful bull pullback on the weekly chart level, right? So everybody's panicking. 3 weeks down in a row, and now we have 2 weeks up in a row here, and a nice big strong week here on the S&P 500. And again, here we had a swing high here, and then a swing high here, and here, and it was higher. So that was indicator that this was just a little pullback, and likely to continue the trend upward. And so that's what using the MACD in this way is telling us. We got the Dow here. It went up here. It's doing a mini bull pullback here. It had 2 weeks down, and now it has a week up here, nice and strong. And the NASDAQ here, with 3 weeks down, people were panicked. The sky is falling. Not so much. Boom last week, and then boom, boom again this week. Just off its size, closing right at the 14,000 area. Small cap Russell, not nearly as bullish as the other ones. It was doing, and it started a bull pullback, but It came down here, got caught up here in this 200 moving average. Again, that's a 200-week moving average, the 50-week moving average, and the 20 all caught up in this bundle here, now starting to roll back up. But again, 2,000 here is a very strong resistance area. 2,000, very strong resistance area for the small cap Russell. And on the weekly chart on bank, you can see it's still down here, still trying to recover from the big drop from back here in March of this past year, of this year. And the VIX, you can see how low it is. All of a sudden, bam, on the weekly side. See how low, bam. So 2 weeks ago we were up at around 18, and now bam, we're down here to 13. All right, let's go to the now let's go to the monthly charts, and again, these trump the others. Now we just closed the month of August, and so what's happening is that this candle here, do not look at that. That's 1 day's worth of data, but we see here we're starting to just forming a high base here on the S&P 500, right at 4,600. Seems to be a major resistance area. Now, it doesn't have to be a perfect number, but right at 4,600, which if you go back here, it was tagging at 4,600 back here, way back in April. It was support, then resistance on the monthly chart. So there's something significant in the market there. And again, it's all psychological, folks. It's all psychological, because that's just a line we just say, that's 4,600. And so don't just remember that in the market's always right? So then we have the Dow here. We look at how long it was in this base. 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks it was sitting there in a base. It finally broke out last week, and then it's pulled back down here this week on the Dow specifically. Again, part of that had to do with earnings announcements. Again, don't count that one because it's only 1 day's worth of data. And now we have the NASDAQ here, and now look at right here at the 14,300. 14,300, way back here again in February, it was resistance. And then now it's resistance. It's resistance again here in the last 2 weeks here. And look at this week on the NASDAQ, went all the way down this week and then whoop, all the way back up in 5 days of trading. Now, again, Monday, the markets are closed for Labor Day here in the U.S., so we'll be a shortened trading week next week. Again, this is just one, this is the monthly chart. This is just 1 day of data on the month. And then the small cap Russell, again, you can see how it's been a little bit weaker. Again, just hanging down here. And below that, here's that 2,000 level I talked about. Look at that, hitting its head at 2,000 last month. And then this month it started there and then came down, bounced up, and started to come back up here off its lows. So month of August was a negative month for the Russell. Okay, now then, those are the 3 areas. So let's go ahead and go back to the daily charts here and take a quick look here at just a few of the tech stocks here. I know a lot of people love to trade those tech stocks. So again, I'm a big Apple fan. It's the most widely traded stock out there. So let's pay attention to what it's doing. And here you can see that, oh man, just got moved here. The capitulation I talked about. So Apple was on look at that run up. Look at that run up here. Man, if you kept your stop below the 20 moving average here, man, you'd still be golden there until you weren't anymore. And that was on earnings. We say don't trade over earnings. Investing over earnings is a different thing. Don't trade over earnings, because look at what can happen. You don't know. Bam. And it came down here. And then look on this day right here, which was the 17th. It gapped down and ran up with big volume. That's possible capitulation. And sure enough, it followed right through there. And so, the broader markets did the same thing. Amazon did not have the big, huge pullback. Had a slight pullback here after its big jump in earnings. But where did it pull back to? Right here to where it was at the 132 level where it was prior to earnings. Now it's starting to roll back up. Netflix had earnings. Everybody, yay! And then, well, maybe not. And that's right back to the area that it was trading here back in June. And now it's back up to that level again. And again, we're in summer doldrums. You have to remember, summer doldrums is that people are at the Hamptons, people are on the Jersey coast. They're not trading as much, so the volumes tend to be a lot lower. Volatility tends to be a lot less. But every market is unique. Here now that folks know how to start coming back, and we could get some more activity in the market. Now look at this, right at 3,200 here on Google. It did not pull back like the rest of the market did. It stayed right here. Why? It's an AI play, right? So people are keeping that one up there for AI. 32 now, boom, went up to 135 here now is where it closed on Friday. Last one, or next to last one here is good old Microsoft. Again, it's a AI play. And bull flag here, right? Let's see here. Bull pullback, bull flag. It's kind of tough to call that one. Would have been about like that, and like this, connecting the closes. And then look at it, broke out here on this day, on the 22nd. And then we can end this whack-a-mole day here in the markets, and it's starting to rise up slowly. Then the last one I want to just talk about is Tesla. And Tesla here was 150 here just in April, and it went up to almost 300. Pull back here to 10 again. Here's that. Now this is what they call an abandoned baby. Abandoned baby, where it's a form of capitulation. Because look at the huge volume here. It gapped down, and then it gapped up the next day. It's like if you could shoot you put your stick through there. That's what my abandoned baby. That's a possible reversal pattern. So when it did this the second day, and that's possible reversals. And what did it do? It came up, based, and that's gone up again and based. So Friday, it pulled back a little bit, but it's been up here at the 260 areas where it was high basing, doing well there. All right, those are some of the tech stocks there. So there's the, whoa. So that's it. That's for the quick and the curious, and that's for then a little bit longer look at the markets there. And again, Des, he had to get out of Tampa. He was they were going back to Indiana to visit family. And so they took off early before the hurricane hit. So they're safe in Indiana, but he's not able to do the video this week. So I'm doing it for him. So this is Mark the Meerkat. Hey, just remember, the markets can remain irrational longer than you can remain solvent. Trade well, and may your winners run.